What's going on, everyone? So, we had a pretty big week this past week, and don't expect that volatility to go anywhere this week. And we got a very, very high impacted week ahead of us. So, I'm going to break this video down kind of a two-parter here. So, I want to kind of talk about some of that CPI data that came out last week, and along with the weekly recap, and then what to expect for this next week as well going forward. So, what is CPI? So we know the CPI is the Consumer Price Index. It's the index that measures the monthly change in prices paid by U.S. customers. Now, Federal Reserve Chairman Powell has spoken this past month that he actually looks more at core PCE data than CPI. So I actually wanted to bring this graph out and kind of explain a little bit why he wants to go with that. You can automatically see right now that the housing market is heavily weighted in the CPI at 42.1%. Now, if you look at the PCE data, it's only 22.6. So this kind of gives it a little bit more of a broader idea. You can see a little bit more besides the housing market in the PCE data. So that's kind of why he's wanting to look at that. He can get a better idea of the rest of the economy, not just the housing market. Now, I brought out some of the CPI data this week. I'm not going to talk about each one, but you can tell it all came in really hot. But I want to talk a little bit about why this CPI data mattered so much. Well, some of the Federal Reserve members have been talking, saying that CPI data has been coming in hot mainly because of gasoline prices and stuff. Well, gasoline prices are going lower, and yet CPI data came in hot. This just shows that inflation has not peaked, and I've said multiple times that I want consecutive months, probably 3 or 4 consecutive months of inflation readings to be continually going down before I get on the bandwagon of inflation peaking. So what to expect from inflation? Well, it's not looking good, folks. So we have inflation going higher, and we have labor market coming in numbers strong on the surface, at least. So the Federal Reserve is going to look at this as very good. They're going to see inflation's bad, but the labor market's holding up strong and resilient. So they're probably going to come in with a pretty big rate hike. If they don't come in with the 75 and do the 100, then market's going to puke. But if they come in with a 75 basis point rate hike, expecting them to possibly say they're going to do multiple months after of continuing rate hikes higher than expected. So here's the agenda for this week. You can take some notes down if you would like. Like I said, the housing market is trash right now, so expect those numbers to possibly miss. Everything's looking towards Wednesday, though. You have the interest rate decision for September. Forecasted is a full 100 basis point rate hike, even though it's only 30% projected right now. So that means that if they come in with a 75 basis point rate hike, expect the market to run. Just mainly on the point that they're not going to be doing that full 100. Now, I don't know how far that run's going to happen because Powell has spoke I think it was either last week or the week before. He said that they were going to be doing the job until it was done. So the Federal Reserve's finally putting their foot down, even though it may be a little bit late. So he may come in with a pretty hawkish attitude, especially with the labor market numbers coming in strong. And then, of course, you got the jobless claims, and you have some manufacturing PMI coming out. All right. So I want to talk a little bit about technicals here. So the put wall is still at 390. If you follow my daily updates, I will let everyone know if that call wall or put wall moves. But as of right now, it is still only at 390. So anything below that, expect it to be oversold and could possibly see a bullish move up. But volatility below this line will be towards towards puts. We also have a gap fill down here around 378, 380 level, so we could see a bounce off that gap fill. And then, of course, we have a gap fill all the way up from up here where we fell down from that CPI data. I don't expect us to jump up here unless, I don't know, somehow Powell comes in with some crazy bullish news, which I don't expect. If we get a 75 basis point rate hike, we could possibly see a jump up here now, since now it's only between a 75 or 100. Now, Apple, we came up here, we tested this downtrend channel we've been fighting on the daily. Couldn't get a full break above it, and then just started breaking down completely. Retest. We tried to jump back up into this uptrend channel, and then CPI data came out, and of course it just obliterated it. But what I really want to look at is Friday. We came down, but kind of saw this little bit bullish push at the end of the day, especially with SPY. We ended a little bit green there on a bullish push. So of course we were down negative for the day, but could possibly see a bounce, try to gap fill this at least up to about the 388 level. So just keep an eye on that. And then that's going to be it for the day. If you have any comments or questions or anything, just leave it down below. I'll try to get to everybody's. Just enjoy the rest of your weekend, and if you like this video, please don't forget to like and subscribe, and let's just make some money, guys.